All right. So welcome you guys. My name is Aram Chu, and a lot of you guys have been wondering what it takes to be an expert trader, and this is what this webinar is all about. Let's get right to it. So you guys are probably wondering, does it take experience? It doesn't take experience. It takes knowing the right information, right? And that's one thing that's very important. Just been trading for 6-7 months. I have right here, people like Tone, she just hit her first $500 day. Just people just starting a trade with us their first month are having results like this, right? And I can just keep going. People, starting with $15 turning into $237, right? So that's just two people right there. I'm not gonna keep going, but let me just get right into the charts, right? So I know a lot of people are here already know what Forex is. It's, the currency, the foreign exchange. So for example, we could have a currency pair like the Euro USD, the Euro versus the dollar, the US dollar, right? So the first thing you want to do when you're looking at a chart, or what I suggest people to do, is look at the highest time frame. So that's the first thing you want to do. So you go right here and you look at the monthly chart, right? So let's see if I can zoom out a little bit more right here. Okay. So what we look for usually is W formations. So as you can see down here, we have a W forming on the monthly chart. So when we see this on the monthly chart, this is letting us know that, a huge reversal is about to come. And as you can see right there, this is the first leg that's coming. So right now will be the perfect opportunity, to set up for a buy and let this run. But obviously we're not just going to enter off the monthly. I'm going to get into that though. But one of the main patterns you want to look for is this. Let me show you guys. It's called the MAAW, right? This is going to help you help you identify where you are in the cycle. So right here we have a huge M on the monthly chart. Right here, let me actually draw it out so we can all see it. Right here. So there, as you can see, there's the M. Right. So this is how you know you're coming into a downtrend. And then here's the A that I'm talking about over right here. This is the second part of the cycle. This is the A right there. And then another A over here. So there you go. So this is the cycle on the monthly chart. It works for all time frames, but obviously the monthly chart is the highest. I mean, it's the true trend, right? The highest time frame is the true trend of the market. So then now we're on the W phase down here. So that's very simple. There. So now we can expect this to come up, give us a come up into the second part of the cycle, which is what's it called? WVV. So I'm actually going to show you guys what WVVM is on a different currency pair, so I can show you how it works on every chart. But basically, we can expect this to come up and give us like a V. I'm going to show you guys on a different currency pair for a second. So let me go over here. This is the US dollar versus the yen, right? So the WVVM that I'm talking about, it happened on this pair already. As you can see, the W is down here, right? Remember how the euro is at the W phase, right? And this one already did it. This is the W down here, and then the V here, boom, and then another V, and then a huge M up here, boom. So this is where it's at in a cycle. So now this is going to do the MAAW. So this now is going to do what the euro did in the past. It's going to go in a downtrend now. So you can see these cycles work almost in every pair, right? So that's beautiful right there. Let me actually draw out this M up here, so just in case you can't see it, take it from the high, like from here, and then you take it to the spike down here, and then back up here, and then boom. So if you're actually drawing it, you know, if you can't really see it with your eyes, you can actually practice drawing it like this. And if you see the M right there that you drew it, and you're like, wow, okay, it's a huge M. You know, I'm going to look to sell it. So like you look to sell, and then a huge bar comes in, and then you're in big profit throughout the whole month. But obviously, you know, I'm gonna show you ways of how to have a perfect entry. But this is just the beginning, you know, of what the first thing you have to do when you're analyzing a chart, right? So let me actually continue with the euro now. So here we have the euro. So have this taken note. And then from there, you know, I already know the weekly and the daily. Let's look at the weekly. Okay, this weekly, you know, looks like it's in an uptrend. It's pushing up. So you guys already know what an uptrend is. But I can actually just, you know, break that down real quick on this webinar as well. Some basics. All right. So so for example, this is a downtrend right here. Let me break this. Sorry. Like this. Boom. Boom. So as you can see, right, you guys, this is a downtrend, and as you can see, the euro has been downtrending. Makes sense? And this is the terminology for it, just so you guys know. Right here. This would be the high, right? Let me break it down for you guys. The high right here. So this is the high, and then it comes down, and what it does, it forms a lower high, and that's where we take the sell usually on a downtrending market, which is simple. Right there, and then these are the lows. Right, this is just basics just for people who don't know what a downtrend is. That's the low, you see? And then down here we have another lower low. Right there. Right, so this is a downtrend, you guys. Let me just label it for you so you guys take note of that. Downtrend. Right, very simple. Right, so in a downtrending market, you know, you want to sell it, look to sell it on the high and lower high. But let me show you what an uptrend is. It's just basically the opposite. So I just started using this platform, guys, so I'm kind of slow with it, so just have some patience. So I'm gonna make this blue. So here we have our market going up, very simple, and this is how it moves in the market, like this. You know, I'm not the best at drawing it, but you have to look for the high and lower high, and then the low and lower low. And I'm gonna actually show you guys how to find that here too. So right here we have the this is the low, right? Yeah, this is the low. Boom. And then what it does, the market comes up and then makes a higher low. Boom. So that's very simple, you guys. Let me label it for you. Higher low, boom. And then right here we have the high. Boom. There. And then up here the higher high. All right, so there you go, uptrend and a downtrend. So you guys take note of that. Very simple stuff. So obviously, as you can see, this whole thing was downtrending on the weekly chart, and then now we coming into a phase where it's bouncing down here, and then it's coming on a strong uptrend right now. So let me draw it for you. So down here we have the low, right? So second thing I do is you look at the overall trend. Is the downtrend or uptrend? So down here is the low, and then we have the high up here on the weekly chart. Swings, right? And then what happens? The market comes down, it spikes this low down here. It fakes a lot of sellers down here, and it spikes up. That's another higher low right here. Boom. And it comes back up. So this is when I'm looking at the weekly chart, right? And I already know on the monthly it's going up. So then on the weekly, if I see it's going up on an uptrend too, then hey, that's double confirmation. It's going to probably go up. But I'm not even done yet. This is just the beginning of your whole analyzation, basically. And then it comes up and it makes a higher high right here. Right there. And then boom, comes down and it makes a higher low. So as you can see, this whole market has been uptrending. All right, there's it, higher low. As you can see, this whole market has been uptrending, and now we just have to see what happens. But there we go. We already know it's a buy on the monthly, and it's looking to go up on the weekly chart as well. So now let's take a look at how the daily looks like. From there you can I usually just look at the 15-minute because that's usually where I enter. So I usually enter in the 15-minute chart. So basically, on the monthly and the weekly is going up. Then you're basically set. You can go look right into the 15-minute chart, which is what I do, and this is where you usually enter at. All right. So let me break this down. So last night, I believe this was last night in London. So let me break down throughout the day. This was yesterday. I mean, not yesterday. Sunday open right here. So Sunday opened right here, right, you guys? And what does the market do? It goes kind of sideways, kind of fakes people out, right? So you can see this whole box is just moving sideways. And then what happens is on London, which is the time, let me see if I remember the time, 11:45 p.m. Pacific. And then the Eastern time is 3:45 sorry, a.m. Eastern. And then within these time frames, you're trading between a 2-hour range. So I would say, to be more specific, I would just say 11 to 12. And then this will be 3 to 4. That's to be more specific right there. London. So this is London session, you guys. This is what happened. London session, this thing drops. And then, you could have traded this because you had a nice spike right here. So look, in London, when you see a nice spike like this in London, you can see on the 5-minute, it's a hammer, right? This is a hammer. You guys see this hammer up here? So when you see a hammer in London, and then on top of that, you can foreshadow an A formation, right? Because remember how I was saying it works in the small time frames too. So let me actually make this bigger. Boom. So you can foreshadow this. Like, look, let me bring it back. London, boom. You see the hammer up here, and then you see this big thing. You see that has to complete. So you're like, you know what? I'm gonna take a nice sell right here, and then you put your stop loss, on top of the hammer, like up here, right? So that's your trade setup in London. Very simple, and as you can see, I actually spiked this low right here, previously, I believe around Asia, and in London it kind of retested it, and it made like a huge M, as you can see on the right here. But honestly, you don't need to know. I mean, that's just more confirmation, right? But that's a nice setup right there. Huge M, right? So that's your setup in London. You know, you could have traded that in London when you saw that hammer. So let me go over the risk, right? Very important as well. Let me actually delete this now real quick. So that's a very simple setup right there, you guys. So let me go to the 5 minutes. So if you would have saw on the 5-minute chart, you would have saw this hammer. You would have placed your sell, you know, at the open of the next candle. You know, so the price would have been right here where you would have taken the sell. And that's at 1.142. So this is like, you know, for example, you're taking like an 8 pip risk plus a spread, you know, a 10 pip risk, right? I'm sure, well, if people here don't know what a pip is, I'm just going to explain it just in case. So a pip, let's say, for example, we sold it right here at the price at 1.1422, 1.14220. Right, so we sold it here, and if we're taking a 10 pip risk, it would be, or actually, let's say with stop loss was here. Hold on a second, you guys. Let me just write this down for you guys. 4289. So there you go. Okay, so your stop loss, you guys, is basically a precaution. What it does is, if the market comes back up and, you know, it reverses on you, it stops you out and you don't lose as much money, you know, as you could have lost if you didn't have it, right? If the market comes all the way up here, you only lose a little bit, right? So now to identify the amount of pips this is, we basically subtract this. So as you can see, this is basically around 6-7 pips, because we subtract it, right? So very simple. So this would be 9 right here. Just breaking down the basics, I think that's important too. That's 9, and then this 8, that would be 6, right? 6. So that's 6.9 pips, basically 7 pips, right? So, and then plus the spread is like almost a 10 pip risk. The spread is the dealer, you know, taking your commissions and stuff, right, you guys? So this is a 7 pip risk. This stands for 69 points, right? So the pip is 1 decimal back. So that's 6.9 pips. We'll round it to 7, okay? So if you have a $300 account, you know, on this trade, you could have risked, you know, maybe, let's say $50. You know, I think that's reasonable, especially if it's a high probability trade. You know, we know it's a hammer. London, it rejected its low previously. It's a nice M formation, nice A. You know, it's a nice high probability setup. So let's go in kind of big, you know, and risk like $50 on a $300 account. And you know, let's see, the results would be, let's say, if it's 7 pips, and let's say even if you did a 0.5, so 0.5 lot is $5. Let's just say you did a 0.5 lot. Your risk right here would be $35, right? 35. So that's how you manage your risk, right? You guys, you always have to know your risk before you place a trade. Always identify your risk before you place a trade, so you don't, you know, if you lose, you're not, you know, crying about it, or, you know, stressing about, oh, I just lost it, you know. So it's important to just trade without fear. You know, that's how you do it. So you let this ride, you know, for usually I tell people, you know, make sure you take your profit. So, you know, as the market's coming down, you can move your stop loss, you know, lower and protect your profits, right? To break even. But usually this thing went down for like, wow, a couple more pips all the way down here. Let's say it came down 1.138. This is where it came down to. You know, that's like 40 pips. So this thing came down 40 pips. So if you're catching 40 pips on this, that's let's do the math on that. 40 times you know, $5, which is what, 200, I believe. $200. Yeah. So this, if you would have caught 40 pips on this on a 0.5 lot, you would have caught $200 right there. And you know, this is just London session, and it's just one trade. You know, you caught $200, and that's a low risk trade. You know, $35. You know, so this is how you compound your account, you guys. You would have taken profit, and then one of the things that you guys want to know is that this whole movement right here, is not even the right trade. Like it's actually a fake move. This is the stop hunt, you guys. Because London, what they do, they issue a stop hunt. So this whole move is a fake move. And then after it's done, which is around, you know, we can actually count the time. It actually happens overnight. So it usually happens when people are sleeping. That's when the market makers, people who are actually behind the market, move the market when people are sleeping. So in London, people make their money. Some people who stay in, you know, maybe they stay in, who knows? But what they do, they want to wipe the market all the way back to take their money, or you basically balance the equity in the whole market. So this is 15, 30. That's like almost 2, 3, like 3 to 4 hours, right? So this happens overnight, you guys. If you guys are trading overnight, you would look for a reversal, right? This is what happens. And yeah, so this is what happens. You're looking for that reversal, and it's usually a W formation. So there it is. There's your W formation on the 15-minute. You can clearly see on the 15 minutes. So remember, you look, draw it out so you can start seeing it. And then boom, when you see this nice candle come up, that's a nice W, right? You see that. And then you get in on a retracement. You wait for the market to retrace, and then you get in on a buy. So you would have been on a buy down here when you would have seen this hammer, because you already know it's a W here, so you already know it's going up, and this is the low. This is the preconceived low for the moment, because you know that the market makers are in control of this move, and they're moving the market back up. So they're real people, because then what happens is when people are waking up in the morning, they in New York session. So now in New York session, we have it over here. This happened in the morning, which is, I believe, I think the time is 7:30, or I'm actually gonna say it's from 6:30 to 7:30 a.m. Pacific. So that's New York. And for the Eastern time, it would be, I believe, 9:30 through 10:30 a.m. Eastern. So that's the time for a New York session, you guys. This is very important. The timings are everything, you guys. So take note of that right here. And this could happen in any pair. I'm just going over the euro because it's the most traded pair and it works so nicely. Right here in New York session, we have another W. So let me actually go over this W down here that happened. Let me show you how you would have entered in that. So right here, you know, you see this big hammer, this big spike down here, it comes up. And as you're drawing your line, you know, you see the second leg starting to form right here. Right, and then when you see it starting to come up right here, you see this little mini W. So when you look for that mini W right here, you see how when these formations happen within themselves as well, a little mini W. If you actually take your lines and draw it out, you can see it so nicely. So that's nice. You know, you would have taken a buy up there, and your stop loss is down here. A nice risk. So if you're staying consistent, doing a 0.5 lot, you know, and you know this is like 40 pips, you know, this is like 50 pips, then you would have caught so 50 pips is $250. So this is $250 right here on this trade. And even if you go smaller, even if you do like a 0.25 lot, you could easily still make at least $100 a day. You know, it's possible, just knowing your risk and taking these setups. So right here, perfect setup, you buy it, right? You can buy it up here. When you see this nice green bar and you write it out, you know, you write it out. But if you get a nice entry, you could get it down here. But even if you get it up here, you can write it out and just let it do its motion. Because you already identified your risk. See, that's the whole point of identifying your risk, because when the market comes down to fake you, you don't get emotional about it. Okay. And then what happens in New York session, the market comes and gives us a big spike right here, big hammer. So you guys see that big hammer? So this is New York session. When New York session comes, you're looking for that big hammer. You already know what's gonna happen. They're gonna come down. So you could have been on a sell right here, and then you could have, you know, scratched out. You could have basically gotten out of there because you would have had your stop loss at break even, right? Remember, stop loss at break even, and then they stop you out. But you have to remember that these are the market makers. They usually come back to swipe one more time and then give you an M formation like this, New York session. Boom. And then you already know that's the cue to get back in. This is the cue to get back in for even a bigger lot. Because look at the risk that you're taking. You know, this is like a 5-7 pip risk with the spread. So the risk on that, you know, on a 0.5 lot is $35, $50. And, you know, there's, you know, you would have caught like at least $100 to $150 on that. So this is how you can, you know, just focus on one pair and, you know, look and wake up at these sessions and, you know, just trade these sessions. You guys, you feel me? So usually, you know, I usually take profit. You can take profit within 45 minutes to an hour. And then in this trade, you know, you would have looked back at it at 45 minutes to an hour. And if it's still like not profiting too much on, you know, within an hour, then, you know, write it out for another hour and then wait to see where it's at. So 2-hour max. The 2-hour max is, you know, the most I'll leave it on until it's profiting. So obviously in this situation, it retraced kind of heavy to give us a stop hunt. But we already know that this is the W formation, and we know that's the reversal coming. So we could have stayed patient, got back in. I mean, stayed in, right? So that's basically the market makers. They just try to mess with people's heads when they come hard like this. But you got to remember why you already traded it, because the W and this mini W. So that's your cue right there that this is going up. And then this W, this M up here, you write it out, you know, you take quick profit. And then Asian session, what do we have, you guys? The consolidation again. You see the consolidation. And now we're waiting for London. Now we wait for London patiently, you guys, and we wait for these formations to happen. So this is what we do. You guys, on the 15-minute, 5-minute, we just capture pips in and out. And that's what we want to do. We want to align our pockets daily and compound our accounts, because, you know, at the end of the day, the banks are only giving us 0.01%, you know, at the end of the year. So this is the euro, right? Beautiful, beautiful, beautiful trade. I can actually go back on this more and break down some more trades, because sometimes, you know, they have variations, right? They give you variations sometimes. So let me actually show you this one, which I think is very important, because throughout the day, as you can see, the euro is going sideways. Same thing, you guys. So up here, when the euro comes up here, gives us some nice 3 spikes, because this is London. This is the same situation. Asian session, sideways, right here. So make sure you guys get the times over here if you guys are taking notes. The time right here, this is London. So make sure you guys have that time written down. That's London. And then this is New York over here. And then this thing happens overnight between these sessions. Session changeover, basically. So make sure you guys note that. Right. All right. So, okay. This is Asia. And then right here in London, it drops. Let me put that right there. And you can actually see, even on, you know, sometimes you can look at the minute chart. I actually look at the minute chart for entries at these specific times though. So it's over here. As you can see, on the minute chart, you see a nice spike, hammer spike, and then a nice M formation. Boom. London, you take that trade on London. You're looking at the minute chart, you see this happening. You're in there for a sell, and then your stop loss is right above it. Boom. So imagine how many pips you could dominate, you know, in just one pair, you know, consistent basis. So right there, you're taking that all the way down here. Let me see. So this is just a beautiful trade. This thing happens overnight. And, you know, this is the W that we're talking about. So beautiful trade right there, you guys. Down here, what we see here is, you see right here, the 2 hammers right here. So right here, I'm actually going to highlight it for you. The 2 hammers right there. Boom. A nice little mini W on the 1 minute, obviously. Boom. You can actually draw it a little bit. So this is just how we get small risk trades for high rewards. Because I know a lot of people are like, you know, risk only 2% of your account. I understand that. Like, I totally do. But those are on 50-50 probability setups. Those are setups that are basically in the gambling business, right? But when you understand like these formations and why they're happening, is to trap. So this formation right here, when it came down, you know, these spikes right here, you know, they were bearish at one point, right? So people probably had a support level right here, and then, you know, they're probably looking at the market, and then it's bearish at one point. They're probably thinking it's a breakout, you know, and then they're selling it, right? Or even people who are selling it right here, you know, they have their stop loss. The market is going to come back up because it's not trying to let the average person eat, you know, make money. And that's what these dealers and brokers, they see this on their track sheet. You know, obviously you're signing up with these brokers. They see who has a margin trouble, how much money there is in a certain place, and they're going to move the market there. So this is a mini W, and you can see it on the 5 minute. You see on the 5 minute, you got 3 spikes. You can see all those spikes right there. 1, 2, 3. And a nice hammer formation. And then a nice V. Huge V. Wow. Boom. You're in there for a nice buy. Take a nice position and take that 60 pips. Take those 60 pips home. London, overnight, and then New York session, we have a retest. So New York's overnight, we have the M. I don't know if you guys want me to, I'm actually just going to draw it for you guys, because you guys so you guys understand. Let me see right there. There's the M. You see? Happens on every session. Like, it's just consistent. You just have to be up to catch it. And then in New York, it comes down and it issues a V. So I can actually go to 1 minute over here. So in New York, if you're actually drawing your lines around New York session, and you know you have this, you take it from the spikes, and you're drawing it, boom, and then boom. So you see that W? If you draw your lines, you can see this perfectly, that W and a V inside of the W. And that's just a beautiful trade. You can get in for a buy, and then your stop loss is under the market. Boom. So these are the trades that we're taking, and these are the trades that, you know, we're helping our people catch. Right? Because I know some people, you know, they probably can't be looking at the market, or I don't know, maybe they have a job, they have to go to sleep, you know, but that's what we're doing over here. We're able to actually help people, you know, build their accounts. So you know, with this clear setup, man, you're taking those 70 pips. That's a huge move. Look at that. Wow. You know, take profit in 45 minutes to an hour. If you're in profit, take it, or you move your stop loss to where it is. You feel me? So beautiful trade. And if you can actually look at the 15-minute, you can actually see. Okay, let me actually just write it down. New York, so people can. So New York. Okay, you can actually see a huge W. A huge W. Wow. Now that's amazing. Boom. Wow. So there you go, you guys. Just dominating one pair. Right? So now if we actually look at a different pair, I'm actually going to show you guys from scratch. You know, all these lines right here, you guys, it's just visual. You know, but it's not needed. You know, you can, but obviously it is needed in the beginning to train your eye if it works for you, right? So let me actually break this one down. Let's see. Let me actually, yeah, I was at the monthly. So here we are. So now we expect a V or an A to come on this section. So here's a W, and then now we're looking for the M, A, W. W. So this is going to come down and then do what it did over here. You see how this has an M, a V, and then a huge drop, and then a W. So same thing's going to happen here, you guys. This is going to be looking to drop. So now we look at the weekly, and as you can see, the weekly, it's in a downtrend. Right? Remember how I talked about the downtrend, you guys? You see this is downtrending on the weekly, right? And then we look at the daily. It is downtrending, right? So it might come up for a retracement. So the retracement is basically when the market has to come back up and, you know, clear some space. So right here, you know, we have a possible V setup, you know, right down here. You could probably come up, make a V, especially if we look at the 4 hour, we have a nice W, you know, if we're taking our lines, right? We want to measure it. We want to make a nice visual. Boom. So there it is. A mini W as well in here. So we could expect this to come up a bit more. But you also want to remember that it's an M on the monthly. So the monthly is the most important. So if you know that this is a sell on the monthly, and it's on the 4 hour and the daily, you think it's gonna, we're looking at it, it looks like it's gonna go up. We're still gonna be cautious of the sell because it is a sell long term. So we can expect this to come up but not come up too much, right? So this is when we look into, you know, the formations now into the 15-minute. And the reason I'm saying it's a W now, because right here in the 4 hour, you know how I was telling you guys, these formations, these cycles work on every time frame. So over here we have an M up here, and then the A or the reverse V up here, and then another A here. Get this V out of the way. Boom. And then now what? The W. So we can expect this to come up and then look to continue the trend down, right? So that's what I see on the 4 hour, and then we can actually look into the 15-minute now, see what we see. So let me take this out. So, you know, let me take all this out, you guys. Okay, so, you know, this is consolidating throughout the day, and, you know, this is Asia. This is Asian session, and then we wait for the breakout, and it's breaking out right now, and then we wait for London for the setup. So right now it's Asian session. You know, we can actually go like this. So on London, we want to wait for a huge breakout going up or down, and then we look for the formation, which is the M or the W, right, you guys? So yeah, so now we wait for the London session coming, and we just wait for a huge breakout in London, and then look to get in the M or W. And another thing is, you can actually look at the news, because the news is actually used to complete the patterns. So this news is another, you know, part that you can use for, you know, identifying when to trade and stuff. So let me go to economic calendar right here. So I'm actually in Pacific time, you guys. So let me go to Pacific. Okay, so right now we have news coming for the euro around London. So this is around London. So around London, look to trade the euro, and, you know, look for the M or W formation, right? And then same as the JPY. So we can look to trade both of these pairs around London, you know, and we can see what happens. You know, we want to see the formation happen. We don't just want to jump in a trade, right? So, you know, these news are used to complete the patterns, right? And another thing you can do is look what happens overnight. So look, overnight we have pound news. So the pound is expected to move, you know, around 130 Pacific. And then we have some small euro news, not really that important. But in New York session, especially overnight at 5:30 Pacific a.m. and then 6 a.m. Pacific overnight, wow, a lot of US dollar news. So we can expect a lot of US dollar pairs to move. And then we're looking for these formations on the charts. So the news is used to complete the patterns, you guys. More euro news. So one way to tell if a news is positive or not. So let's say, for example, we're looking at the German CPI, for example, right? And we know the previous number is 0.8. If the actual number is higher than 0.8, or if it stays consistent, then we know that the euro might be stronger. But at the end of the day, you know, we're looking for the formations on the chart, because sometimes the news could trick people out. But all you really want to remember is that it's used to complete the patterns. So you're looking for the patterns at these times when the news comes out, right? So that's basically the main components of, you know, how to profit in Forex, focusing on these charts, you know, for now. But I think that's about it. I'm going to wrap it up for now. If you guys have any other questions, right now would be a perfect time to ask me. If not, then you know, we'll wrap this up. So are we good? I think we're good. All right, man. So I'm gonna wrap up this webinar. Great to have everybody on here. I hope you guys learned something, and God bless everybody.